Hello everyone, this is Juan Sarmiento and today's Friday, November the 19th. I have been working on the trades for today. Unfortunately, I made the recording and something went wrong. I need to do the recording again. So you can see that I have some positions here filled. So I'm going to go alphabetically here and show you what I did and did not do. Let's start with Apple and go to the Analyze tab. And you can see that we have November for the expiration of the shorts. So there's no, December the 17th, there's plenty of time for that. So I'm not going to touch that. ABTH is the same thing here. You can see that the expiration here is December. You can copy your trade from the monitor tab, all the moves you have made from the account statement, and you can just simply select, make sure you go enough days back, and then you, by selecting them here, okay, and in this case I put 300, it could 10 days or 100 days might have been enough, but anyway, you can say analyze trade, and that brings your trade history in here. You can hide your current position, and that gives you what you have and the profits you have made so far. And then I'm not going to change anything. I see that my expiration of my shorts is again December the 17th, so no need to change anything. Let's move on to COP. And in this case, we have a bit of a delta negative. Well, it's delta neutral, as you can see. That's my current strike price, current price is right here. That's the current price slice. And you can see that is the delta is close to zero. Obviously, I sold some calls as the stock was going up, and now the stock has come down somewhat. And here it is. You could buy back those calls or sell puts to neutralize your delta. So let's say I want to sell a put here at 65, analyze closing, and just sell one put to neutralize my deltas, okay? Say show all and change this to 1 to sell, and the strike price December 65 puts, that gives me 81 cents, and that raises my deltas. Instead of 2, it becomes 13, and that's great because the stock can always go up, right? So let's do that. You can always adjust by doing that kind of work. And there it is. Now I have 6 shorts, 10 longs on the put side. And the calls, we have 8 longs and 5 shorts. Let's move on to CRM. And in this case, let me just show you what I have done. Unfortunately, trade history. Let's go to the activity and positions, and here is what I have done. I have this rollover from November the 26th, which is today, to December the 17th, and you can see that the mark is higher than the credit that I'm asking for, so that should fill. If not, we would lower it even further until it gets filled. And you see the bid and natural, that's quite wide. You can also do the put side first and the call side second, or vice versa. Let's do that. Let's cancel this and go to the Analyze tab, and you can see here that the 270 is my strike price. So when you try to do both the call and the put side together, well, the put side is quite distant, so it doesn't want to get done. So let's do the call side first, analyze rolling, and change this to December the 17th. And we're going to get $2.32. That's quite a lot, actually, for the call side. Confirm and send. And for the put side, well, guess what? This put expires next week, okay? So we can just let it sit here, and then next week we simply sell a put and let this one expire. Okay, now we can adjust this to make sure that it gets filled. Let's lower it somewhere here. Let's put somewhere so that it gets filled for sure, and we'll come back to it. Okay, let's move on to Home Depot. Home Depot is a trade that I just entered, and here is the trade. I have it here. They beat expectations by a wide margin, so we have to remember always to use the spreadsheet. If you don't have it, please ask and I'll send it to you. Okay. Then you have 15.1% is the difference between the expected and the actual earnings. So they beat expectations by a wide margin. The volatility skew is favorable. It's less than 3%. So in the Analyze tab, this is my trade. I have my back month and front month volatilities, and that's what I enter here. And if that number, which is the difference between the two, amounts to less than 3%, that's okay. Then liquidity is here. We say create trade, create duplicate, and then you see mid and natural. Those two numbers we enter in the spreadsheet. Here, mid is 54, 30, and the natural is 55. The difference is less than 3%. That's tradable. The only thing that it didn't quite match my hope is the volatility being still a little high. What you would want is somewhere at the bottom of the range, somewhere in the lower to mid area, which is okay, but it's not ideal. So I put it here in orange. But being that the other three things match and that the stock is moving strongly, is making new highs, that makes me motivated into getting it done. So I entered the trade and it got filled. So let's go to the Analyze tab to look at it right now. And as you can see, I just did one leg, one lot, which means only one short call, one short put, two long calls, two long puts. That's the trade. And that was, it cost me less than 10% of my account, about $5,435. Okay, let's move on to low. And in the case of low, I already got this filled. I rolled it over, roll over the calls. The calls here, let's say Analyze trade. And what I did was, this is expiring next week on the 26th, so I roll over the call from November the 26th to December the 17th, and that got filled. The put I would deal with next week, which is I would simply let this put expire if it is going to expire, or roll it over, or simply just add another put expiring in December. We'll see that next week, okay? We have done this today on some other trades, so I'll show you that. Then I also did a roll-up of my long call at 240. I had a long call because as the stock moved up, I rolled over the 200 to 240 and now to 250. So that's my rollover for the day. You can see it here. Lows from 240 call. Let's show it to you here. Analyze trade. I sold my 240 call, which is expiring January, which was good in the money. As you can see, it's 250, and change it for 250, which is exactly at the same, at the strike price of the current price. Okay, in that case, gave me $590 profit or credit that I took. Okay, now you see the delta is positive, and but not by too much. Okay, if you wanted to lower the delta, you could even close this, but that would make it negative, and if you did that, you have no hope. You could lose money on the way up. So we would not change that at all. Let's move to Oracle. That is expiring, the shorts expire in December the 10th, so I'm not going to change that. SPG, okay, this is December the 17th. we have made good profit here. Look at this, it's in the cone. The volatility must have increased since we entered the trade, and now we have a $409 profit. You can get out of this trade. I'm not going to, but you could. If you say, okay, I have my volatility credit, see the volatility spiked a little bit, but it's still in the 30s. If he had gone to 40 or 50%, yeah, by all means, I would have gotten out with good profits. I still think that it could do some more profits for us. Let's move to TER, that's Teradyne, and in this case, the stock has moved up significantly and is expiring. The options are expiring today, so I'm moving this up. Okay, first thing, let's go to the monitor tab, and you can see that I have already sold a put here. So what that means, let's copy it first so they can show you why I simply sold a put. Two puts are actually. November the 19th, I have this put at 35, which is due to expire in just a couple of hours. So selling new puts without closing that means I'm assuming that it will remain above 135 before the closing, and so these puts will expire worthless. So this is what it looks like now, but this put will expire, and this is what it would look like this. This is what the resulting trade would look like. Right now it's looking more like this. Okay, it looks like I have an infinite potential loss to the downside, but the reality is that the stock is not going to go 300 points down in just a few hours. That's the assumption, okay, that it would expire, the put would expire worthless. You can buy it back if you want for 5 cents, no big deal. Okay, let's move on to then the call side. It's not filled yet, but I'm moving. I have to close this 135 call, which is in the money, and move it to December. And it hasn't filled, so I'm going to try and get it a little lower, even though it says 95, so it should get filled. But it's a lot of space between the natural and the mid, and so you need to lower it. And this is why I tend to avoid stocks with too much of a difference between natural and mid, because that implies a low liquidity is what it means. And so this is what happens when you have low liquidity. It tends to sit there, not get filled, and then you have to give up a lot of your profits in order to get it filled. Right there, it looks like I'm giving up 10 cents. Let's move on to UPS. If this will get filled, this would have to get filled. I would make sure that it gets filled before the end of the day. Let's move on to UPS. And UPS is moving up. Let's look at the chart. And it's moving mostly sideways. Let's look at the Analyze tab. December expiration is moving sideways, so it looks fine here. No big deal. But it expires December the 3rd. And then we have WFC. And this I already, let me see if I did anything today. No, I haven't done anything, but in the past, I have sold an additional call when the stock was up in order to lower my deltas, and it's now 49. And this is what it looks like right now. It's a little negative. If I sell a put here, it would neutralize my deltas. No, it would make it delta positive. Do I want to do that? No. I think it could go lower still. So we'll deal with that next week. Other than that, that's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.